Hey everybody, welcome to Mortgage Today for Monday, June 17th, 2024, and oh, what a day it was. UMBS started off the week in the red, down 13 basis points in the first hour of trading. S&P futures were down 3 points. Global stocks and bonds stayed under pressure from pre-election turmoil in France and signs that central banks will be in no rush to cut interest rates. Contracts on the S&P 500 and NASDAQ 100 were steady amid pre-market gains for tech companies. The upcoming French elections are causing investor anxiety as populist leaders gain momentum, leading to higher euro area bond yields. France's CAC 40 benchmark rose 0.4%. but remains volatile. Central banks in the UK, Australia, and Norway are expected to delay rate cuts, adding to market uncertainty. Also, our markets domestically will be closed on Wednesday for the Juneteenth holiday. The Fed Fund futures are predicting a 66% chance of a cut by the September FOMC meeting and have a similar chance for 2 cuts for the full year. We are seeing evidence the economy is slowing and the consumer is getting tired. Yep, that's happening, but it won't happen often enough for 2 cuts this year. I hate to tell you that. That's my prediction. After rallying from roughly 4.45 to 4.22% last week, 10-year Treasuries began a new week with a move up to 4.28. MBS didn't lose ground as quickly today, which is what you'd expect after they underperformed for the week as Treasuries rallied somewhat sharply. It was a boring day in terms of data, events, and volume. New York Fed manufacturing didn't have a discernible impact on the traders, and traders were unsurprised by updates from Fed's Harker. The losses feel like a token correction with effectively no bearing on tomorrow's directionality. That majority of that honor goes to retail sales, or at least all rights are reserved by retail sales. It would still take a big beat or miss to prompt a logical and meaningful reaction. UMBS ended the day down 14 basis points at 100.58. So at 100.58, it is putting us back up in this wide range. We got a ceiling at that very tough Fibonacci line at 100.784. At 100.872, which has been a pretty tough ceiling so far, and then we got multiple floors right around that 100.4 mark with a Fibonacci line, the 100-day moving average, and the 25-day moving average.